What's the difference between an EA or an enrolled agent or a CPA or a certified public accountant? In this episode, we cover all the details.
To learn more about how to secure your retirement and all the different elements you need to know, please subscribe to our channel and hit the bell so you'll be notified when we release episodes every Monday. We have helped hundreds of our clients gain clarity and get on the path to a great retirement. Now it's your turn. Let's dive in.
Welcome to Secure Your Retirement podcast. We are excited to be able to have a conversation we did today on something that we have been working very, very hard on for years now, and that is to really work on what we call our integrated wealth management experience. And a big, big part of that is tax planning, tax advice, and even assisting individuals with tax filing. And we have put all that together. And now we have really a super integrated experience, meaning a person can come to our firm, and when they're here, they're going to not have to worry anything about taxes unless they want to. And they don't have to go anywhere else. We can take care of it all right here in-house. But one of the things that we're super excited about is about a year ago, we hired Taylor is her name, Wolverton is her last name. And she really came on and has been working with us and building up our tax advice, tax planning side of the business. And she is a certified financial planner, and she just now has finished everything to become an enrolled agent. And so we thought it would be good today to talk about what's the difference between a CPA and an enrolled agent, and what does it even mean to be an enrolled agent, and how the IRS views that. So we kind of wanted to talk you through that because we just think that it's so powerful. Whether you're working with us as a client or you just listen to the podcast, really understanding the intricacies of doing good tax planning ahead of time, not just tax filing. And sometimes people, by the way, say, my situation is so simple. Actually, a very simple return can provide us a lot of opportunity. So if you've got a real basic thing and you say, well, what are my opportunities? There are opportunities, and we'll talk a little bit about those. So what we're going to really do right now is just kind of go down, first of all, the list of what's the difference between a CPA and an enrolled agent. So you get a little bit of understanding of what an enrolled agent is and what they can do, and why we feel that's so beneficial to have an enrolled agent on our staff. And then we're going to talk about what is a tax planning meeting look like, a tax strategy meeting. So Mersk, can you kind of get us kicked off here with kind of, first of all, the education requirements or what you need in order to get these certifications?
Yeah. And I think when you hear the word CPA, you just think tax. But the thing is that a CPA can go in a lot of different directions in tax, and we'll talk about that. But a CPA is a certified public accountant. That's what it stands for. And EA is an enrolled agent. As far as how do they get these letters behind their name? Well, there's an amount of education that's required, and there's an amount of certification. And so a CPA is going to have a bachelor's degree, and a lot of times they're going to have a little bit more further education after that. Whereas in an EA, you don't have to have a bachelor's degree. You're really going for a specific type of licensing. So that's one key difference there. The CPA must pass the uniform CPA examination. I believe that's a multi-layered test. I believe there's 4 elements to it in various different areas of tax. And so you have to know quite a bit in a lot of different directions when it comes to tax. And then there's also, with the CPA, there's state-specific requirements that can include educational requirements, a certain amount of work experience, and ethical standards, all established by the state that you're going to be practicing business or tax in. So that's a key difference, is that the CPA is going to be state specific as to all the different boxes that you have to check to get your license and also keep it in force. An EA also has an exam that they have to pass, like he was mentioning with Taylor. There's 3 exams specific to different areas of tax, and really in specialized in taxation. So CPA can go in and has to understand auditing, has to understand all types of different things. When it comes to the EA, we'll talk about this more. It's those 3 tests are all about taxation. So personal and business, and then really ethics are the 3 sections of what someone is going to have to test on and pass all 3 of those exams to be able to call themselves an enrolled agent. And so that's the high level of difference between CPA and EA when it comes to, well, how can they actually get to where they use these letters? How do they get approved to be able to call themselves a CPA or an EA?
Yeah, I think the way I think about that particular part too is a CPA. Let's just talk about financial advisor. You could be a financial advisor, and then you can become a certified financial planner. And that's what Merce and I are. But that doesn't mean much in the sense of what we actually do. We're very focused on retirement planning. So a certified financial planner has to learn about all different types of financial planning. You know, what it means if you're just starting out, or you become very focused in practice though, and that's us. We're retirement planning. CPA is the same thing. They have to understand all of the different aspects of tax planning, business planning, financial statements, all those kinds of things. But then a lot of CPAs will just focus. They might focus on small business owners or individuals. An enrolled agent is very specific, like what Merce said. It is all about taxation to an individual or to a business. So just very, very streamlined. Okay, the next thing is the scope of practice, and I kind of just hit on that a little bit. CPAs, wide range of duties. They can do financial statements, audits, and reviews. They can represent clients before the IRS, but they are limited depending on the credentials that are recognized by the state. They can also offer financial planning and business consulting services. An EA specializes primarily in taxation. They can represent taxpayers before the IRS at all administrative levels. So that's really important. They just cannot perform audits and review financial statements and those things. But again, very, very focused.
All right. Our next section is continuing education. So what is continuing education? It is once you have your license, once you've passed those tests and you're able to call yourself a CPA or an enrolled agent, or even with us as certified financial planners, there is an expectation that you are going to continue to learn and continue to stay on top of everything that it is in the world of, in our case, financial planning, but a CPA in the world of what they practice around accounting and taxes, and an EA around taxation. So a CPA is going to be required and held to a certain standard of how much continuing education that they have to do. And go back to where I said it's state specific for what they have to do to be able to call themselves a CPA. It's also state specific as far as how much education, continuing education they have to perform. And so their state board is going to set what they have to do as far as hours of education and on what type of frequency. An EA, enrolled agent, is required very specific, and it's across the board. It's not state specific. So if you're an EA, you're required to complete 72 hours of continuing education every 3 years to maintain their status. So that's quite a bit of continuing education. But if you think about it, their focus is taxation, and we know tax law is always changing. So it's their job to stay on top of it, and you want them to stay on top of it.
Okay, a real quick geographical limitations. A CPA is very state specific. They'll have to get licensed in whatever state they're practicing. It will be multi-layered. An EA is federally licensed, so they can operate in any U.S. jurisdiction. So very, very broad.
All right, ethical standards. A CPA must adhere to the ethical standards that are established by, it's the specific arena is called the American Institute of Certified Public Accountants, AICPA, and also their state board. So state specific again, but also a CPA's type of organization is going to set these ethical standards. An EA must adhere to the Treasury Department Circular 230 regulations. So the EA is very in line with how the IRS expects them to act, and the Treasury Department expects them to act when it comes to an ethical standard. So they're very connected there to the IRS and the Treasury.
So an EA can do tax returns, all those kind of things. But let me just tell you how we utilize it here, and just so how we think that it ought to be utilized is really kind of doing tax strategy. Tax strategy is not just saying, I know how to file a tax return. Tax strategy is looking ahead of the times, ahead of that year where we're going to file, and say, what kind of things can we do to make it better so that when we do get to our filing of the tax return, we've done those things ahead of time. So there's a lot of process there. So you take, for example, Taylor in our office is reading tax returns all the time, and she's taking those tax returns and saying, what are all the things here that we need to think about so we're ready for next year? And then we are going to meet and talk about all these different things. Now, we're going to go through this pretty high level, but I just want to hit on some of the things that we would consider that Taylor's going to look at, or an enrolled agent would look at if you're not with us. How does that work and look if we're going to do a tax planning strategy meeting? So if you've not had one of these, you might go, wow, that's a lot. And it is, but it's very, very crucial. So step number one, as a tax strategy meeting goes, you are going to look at the current financial situation. Now, that might just seem so simple, but it's considering all aspects of income sources. Are you getting money from your IRAs? Are you getting money from brokerage accounts? Are you getting money from Social Security or a pension? We are looking also that we are considering your investments. And why? Because that could spin off taxable income. We also look at things like debt. So just looking at and considering what's the current financial situation.
All right. The next thing that we're going to look at is the retirement plan. And really, this could be a little bit more forward looking of, well, if you are still working and you're contributing, are you contributing to plans that you're getting a tax benefit from, like a 401k or an IRA? So taking those into account. Also, on the flip side of contributing, we're also looking at someone's withdrawal strategy. So what is their plan to how much to generate the income that they're going to need for the year? Where's that money going to come from? What are those withdrawals looking like? Where are they coming from in the aspect of what type of taxation from each account? And then really adding that all up to give you a good projection of what the year is going to look like. Also planning for RMDs, required minimum distributions. Right now, that is a forced withdrawal that happens at the age of 73 or 75 under current law. And it's all taxable. So we want to stay ahead of that. We want to plan for it, and also potentially think through strategies around trying to reduce that number or getting rid of that number altogether through Roth conversion strategies. So a couple elements there that we're looking at.
So the next section is tax deductions. This one's an interesting one because there's a lot of people who'll say, I've got a real simple plan. I just use the standard deduction. I don't itemize. The standard deduction's $28,000, right around that number right now. It moves a little bit year by year. You say, okay, that's all I'm going to do. I don't do much more than that. Here's a big part of tax planning, tax strategy, is it may be that we can strategize on how to get you into an itemization and save you money on your tax return. There's a few different strategies. We've done episodes on using donor advised funds, and you can go look that episode up, but that's a big one that we could use that would save you a few $1,000. And we can actually push you into itemization. So that's a really big thing to consider. Another thing that would be in there too would be looking at things that we might be able to do with our distributions out of an IRA to get tax benefit if we are charitably inclined.
All right. The next category that we're looking at is tax loss harvesting, and really asking the question, is there any space to do any tax loss harvesting? What that really means is we're looking at brokerage accounts that have appreciated assets, and maybe we're trying to unwind those appreciated assets, but we don't want to pay the capital gains on them just by selling them. So we look at, well, what else is in the portfolio that we could sell for a loss so that we can offset some gain. And that's essentially what that strategy is. And so typically we're going to look at that somewhere closer to the end of the year, I would say in fourth quarter, where we're having that tax conversation and also applying some strategies like harvesting to that conversation.
Another thing that's going to be considered are changes in tax laws. You might think about this. If I know a tax law is changing, and I know that I'm going to have this coming up, there might be things I want to do right now. One of those, by the way, is not a tax law change, but an age change. I go back to what Murph said about required minimum distributions. If I know that's coming up, I might take some distributions this year to plan for that. Same thing with tax law.
All right. And then the next one's timing, and really multi-year planning in particular. We want to be looking forward, not just saying, while a big question is what can we do this year to make this year a little bit better from a tax perspective, we also want to say, well, what can we do this year to make our next year's much smoother from a tax perspective? So that could be utilizing Roth conversion strategies to stay within a certain taxable bucket or percentage. It could be just being smart about our withdrawal strategy and spreading it. Sometimes people would just say, well, I've got 401k money, or IRA money, so let me just start my withdrawals from there. And it could mess up their tax scenario if they just take however much they need. But we could say, well, there's also other money. There's cash, there's brokerage accounts that are taxed differently. What if we blend these together so we have a much smoother withdrawal plan over our retirement life, rather than overloading our tax return in a couple of different years? So forward-looking, multi-year planning, trying to be as efficient as possible with our tax brackets.
The other thing here that I think is a pretty good one is just thinking about life changes, family life changes. Obviously, if we unfortunately lost a spouse in death, then that's going to be something that we have to consider. And again, a divorce, new children, all those things could create scenarios that we need to plan for. So just really keeping track of all that.
Yeah. And I think that is the bulk. Now there's going to be one-offs here and there. Sometimes families have different situations or unique things, but that is the bulk of what we're looking at when it comes to a formal tax strategy meeting that we are gearing up to go into for the next couple months with our clients. And I think, it's not something that everyone does, but we believe it should be, the tax return and the tax scenario should be looked at every year, because there's always going to be opportunities. In worst case, you say there is no opportunity to this year, but at least we took a look at it, and that's going to be more than most can say.
Yeah, absolutely. So here's the takeaway from this particular episode. If you're listening to this and you don't have tax planning, tax strategy in your plan, try to see if you can get it as part of your planning process. It's really, really crucial. We have seen some fantastic outcomes because of that. So make sure you check that out and make sure you understand what it really means. As always, we've got a blog written on this, so you can go to the website, pomwealth.net. pomwealth.net. Yes, right. That's
yep, you said it. Yeah.
And then go to the blog page. You can also top right-hand corner, if you'd like to have a conversation with myself or Merce, click on schedule a call, and we're glad to hop on a call with you and answer any questions that you have. We'll talk to you again next week.
We hope this video has given you some confidence and clarity as you plan for a worry-free life in retirement. But what else do you need? We have created a complimentary video course called 3 Keys to Secure Your Retirement. This video walks you through step-by-step what you need to do to get ready for retirement. You can also check out our podcast called Secure Your Retirement. You can subscribe below.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.